Distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning and welcome to today's workshop for the second phase of the FTA's Comprehensive Corporate Tax Awareness Campaign. We are delighted to have you here with us today in Ras Al Khaimah and want to thank you all for attending this workshop. My name is Roda Al-Mhiri and I will be your Mistress of Ceremonies during today's session. As you may know, in 2023, the Federal Tax Authority launched the Corporate Tax Awareness Program, which included a total of 76 workshops, 17 in-person sessions held across the 7 Emirates, and 59 virtual webinars. This initiative aimed to educate taxpayers on the general principles of taxation for corporations and businesses, as well as various topics related to corporate tax registration. Today's workshop in Ras Al Khaimah marks the 7th session of the 2024 Corporate Tax Awareness Program, which we will provide valuable insights into the UAE's corporate tax regime and helping free zone persons understand their tax obligations under the new regulations. Before we dive into the business of the day, ladies and gentlemen, I would like to invite Zahra Dahmani, Director of Taxpayer Services Department, to give her welcome speech. Please welcome her to the stage.
Good morning, distinguished guests, ladies and gentlemen. I'm delighted to welcome you to this pivotal free zone corporate tax awareness workshop, which is part of our comprehensive corporate tax awareness workshop here in UAE. The FTA is your business partner, providing support and guidance every step of the way. Our aim is to ensure that free zone businesses like yours have the knowledge and the support needed to navigate the corporate tax landscape and to meet their obligations. The UAE acknowledges the role that the free zones play in driving economic growth and diversification. The free zone corporate tax regime reflects by offering various facilities and exemptions, allowing businesses to reinvest their profits and thrive. A key aspect of this regime is the 0% corporate tax on qualifying income for qualifying free zones persons. This demonstrates commitment to fostering a thrive free zone environment and promoting sustainable growth. The zero rate applies specifically to qualifying income which adheres to specific conditions outlined by FTA. Income falling outside these criteria will be subject to 9% corporate tax rate. To ensure clarity, the FTA has developed a comprehensive corporate tax guide for free zone persons available in our website. This guide provides detailed information and practical examples to help you understand and comply with the corporate tax regulations and legislations. I would like to highlight that all the free zones persons, regardless of eligibility for the zero rate, must register for corporate tax. The registration deadlines for the different taxpayer segments are outlined in the FTA decision number 3 of 2024. In addition to that, resident juridical persons with trade licenses issued in October or November must submit their corporate tax registration applications maximum by November 30th, 2024. The FTA is dedicated to streamline tax compliance, enhancing transparency, and fostering a fair tax environment. We reaffirm our commitment to supporting free zones and collaborating with all stakeholders to drive a robust and transparent tax system and supports economic growth. Thank you for your time and attention. Thank you.
Thank you, Zahra Dahmani, for your insightful words. Now, please let me introduce to you our expert, Rida Hamzawi, Tax Policy Senior Expert, Juliana Candido, Tax Policy Expert, Zubair Chowdhury, Tax Policy Specialist, where they will present to us the general principles on taxation of corporation and businesses for free zone persons. Please welcome them to the stage.
Assalamu alaikum. Good morning, ladies and gentlemen, Your Excellencies. Thank you again for the opportunity to meet and to dedicate time to this awareness session that will be dedicated for the free zone corporate tax regime. During our session today, we will talk about the various features of the corporate tax regime for free zone person. Mainly, we'll talk about the condition to be considered as a qualifying free zone person. We'll talk about also what is the concept of qualifying income that is eligible to the 0% corporate tax rate, qualifying activities, what are the excluded also activities, computation of taxable income for a qualifying free zone person, and we'll talk also about compliance and reporting. At the end of the session, there will be also a Q&A part where we'll address some of the questions, the most relevant questions that have been submitted by the registrant for this session. Just to set the stage for our presentation, I think we can just say a few words about the corporate tax legal framework in the UAE. So basically, the first part is the Federal Decree Law issued by the President of the UAE, which is mainly referred to as the Corporate Tax Law. Then this Corporate Tax Law refers to a certain number of cabinet decision, 8 cabinet decision, and also a certain number of ministerial decision, around 26 ministerial decision. Part of this cabinet decision, we have cabinet decision number 100 on determining qualifying income for qualifying free zone person, and also we have the ministerial decision 265, which is related to qualifying activities and excluded activities for the sake of the corporate tax regime of free zone person. Then we have a certain number of FTA decisions, which are issued by the chairman of the board of directors of the FTA. And then we have also the corporate tax guides that have been issued by the FTA, including the guide on free zone person that was released some time ago, and that is quite thorough in terms of example, in terms of going through the various conditions for a free zone person to be considered as a qualifying free zone person. And of course, a certain number of these guides have been translated into Arabic, I believe 14 or 15 guides, and of course all the guides they will be provided in Arabic as soon as possible. The standard corporate tax regime, basically it has to do with a taxable person that is subject to corporate tax on his taxable income, and in that case the person will be subject to the following rate: 0% up to 375,000 dirham of taxable income, and then what exceeds the 375,000 taxable income will be subject to 9%. Of course, the corporate tax law provides for a certain number of reliefs for exemption, subject to meeting certain conditions. We have the exemption for domestic dividends. We have the participation exemptions. In terms of relief, we have the business restructuring relief, the qualifying group relief, etc. Then one of the key benefits under the corporate tax law for taxable person operating in a free zone basically is the possibility to benefit from 0% tax rate on qualifying income. And in order to benefit from this rate, you need to meet certain conditions in order to be considered as qualifying free zone person. Taxable income that is not considered as a qualifying income and that is derived by a qualifying free zone person will be subject to the 9% corporate tax rate without benefiting from the 0% on the income up to 375,000 dirhams. So it will be 0% on qualifying income and 9% on non-qualifying income from the first dirham that is realized by the qualifying free zone person on that taxable income that is not qualifying income. Now, I think a very important element of the free zone corporate tax regime is the concept of free zone and designated zone for corporate tax purposes. So in order to benefit from the status of qualifying free zone person, the free zone person needs to be operating in a free zone for corporate tax purposes. And not all the free zone are free zone for corporate tax purposes. So basically, a free zone as defined in the corporate tax law is a designated and defined geographic area in the UAE. The list of free zone, it has been communicated by the Ministry of Finance, as far as we know, of course, to the Department of Finance and to the relevant, licensing authorities. Then, in addition to the the free zone for corporate tax purposes, which is relevant for most of the activities, we have also designated zones for corporate tax purposes. And the definition of a designated zone for corporate tax purposes is a zone that is considered as a designated zone for VAT, so basically listed under Cabinet Decision 59 of 2017, and also recognized as a free zone for corporate tax purposes. So basically, not all the designated zone for VAT purposes are designated zone for corporate tax purposes. And designated zone, they are relevant for one particular qualifying activity, which is the distribution activity. As a free zone person, you need always to check with the respective authority to confirm if you operate in a free zone or designated zone for corporate tax purposes. So the licensing authority will be aware and would know whether you are in a free zone for corporate tax purposes or designated zone for corporate tax purposes. Now, I think it's interesting to focus on the definition of certain terms. Who is considered as a free zone person? According to the corporate tax law, a free zone person is a juridical person incorporated, established, or otherwise registered in a free zone, and it includes a foreign or a UAE juridical person that have a registered branch in a free zone. So basically, if you are a foreign company, you have a branch in a free zone, you will be considered as a free zone person. If you are a UAE entity in mainland outside the free zone, you have a branch also in the free zone, you will also be considered as a free zone person. We have also free zone authorities. We have also government-controlled entities also established in a free zone. And the concept of free zone person does not refer only to the presence within the free zone or designated zone for corporate tax purposes. It refers to the entirety of the person. So when we talk about a free zone person, we are talking about the entirety of the juridical person, the presence in the free zone and also outside the free zone. Because, of course, the filing of the return, it will be an obligation for the entirety of the person, not only for the presence or for the operation within the free zone or designated zone for corporate tax purposes. And we'll talk about this at a later stage with more details. So basically, a free zone person may have, as I said, a head office in a free zone and a branch outside of a free zone, or it might have a branch in a free zone, so the reverse situation, and head office outside of free zone, whether it is in the UAE or outside the UAE. The operation in the free zone will always be referred to as a free zone parent for the sake of the corporate tax regime for free zone person. So irrespective of what do you have, what is the form, you know, what's the operation you have in the free zone? It's in the form of a branch, it's the head office, the juridical person is incorporated in the branch. We will refer to this always as the free zone parent for the free zone corporate tax regime. What is outside the free zone will be referred to, so the operation outside the free zone will be referred to as the domestic permanent establishment or the foreign permanent establishment. Very important to highlight also that natural person, unincorporated partnership, and sole establishment, they are not free zone person and they will not be able to benefit from the qualifying free zone person status. I think it's interesting to look at the following example just to understand better, you know, what do we mean by this slide. So basically, let's take the example of our LLC. So our LLC is a juridical person incorporated in the UAE. Our LLC has operation in the free zone and outside the free zone as follows. So basically, we have a branch in the free zone. This branch in the free zone will be considered or treated as the free zone parent. Despite the fact it's a branch, for the free zone regime, it will be considered as a free zone parent. The head office in Dubai and the branch in Abu Dhabi, these will be treated as the domestic permanent establishment. And the branch in country B, outside the UAE, so outside the free zone and outside the UAE, it will be treated as the foreign permanent establishment. Who is eligible for the free zone, preferential rate on qualifying income? Only the free zone parent will be eligible to the 0% corporate tax rate. The domestic permanent establishment and the foreign permanent establishment will be subject to the 9% corporate tax rate. These are the fundamentals of the free zone corporate tax regime in the UAE, and this has been explained thoroughly throughout the free zone person corporate tax guide. And of course, in order to be considered as a qualifying free zone person and to benefit from the 0% preferential rate on qualifying income, the entirety of the juridical person, so our LLC in this example, needs to meet a certain number of conditions that we will come across in the following part of the presentation. Of course, also, and I will talk about this again, but I think it's very good also to repeat some key elements. Our LLC will need to file one corporate tax return. And the corporate tax return will cover the qualifying income, the taxable income also that is not the qualifying income. So it will cover the income that is eligible for the 0% rate. It will also cover the other income that is not eligible for the 0% tax rate and that is subject to 9%. So what are the corporate tax implications of being a free zone person that is meeting the condition to be a qualifying free zone person? So basically, a 0% corporate tax rate will apply on qualifying incomes. And as we mentioned in the previous slide, this will be applicable to the business that is in the free zone for corporate tax purposes. So basically, it will be applicable to the free zone parent. Whether that free zone parent is the head office or a branch, it doesn't matter, because it will be referred to always as a free zone parent, as we mentioned in the previous slide. So the 0% corporate tax rate would not apply to the domestic permanent establishment and also to the foreign permanent establishment, which will be subject to a 9% corporate tax rate. A qualifying free zone person, it cannot benefit if you meet the requirement to be a qualifying free zone person and you file your return as a qualifying free zone person, you will not be able to benefit from the 0% corporate tax rate up to the 375,000 dirham, because you will get also, either 0% or 9%, 0% on qualifying income or 9% on taxable income that is non-qualifying income. And also you'll not be eligible for a certain number of reliefs, such as the tax group regime, the small business relief, the qualifying group relief, the business restructuring relief, and also the transfer of tax losses. So if you see these various regimes, one of the conditions to benefit from these regimes is that you should not be considered as a qualifying free zone person. And of course, the policy purpose in this respect is to avoid benefiting from two kind of incentives, from two benefits, because you already have the 0% on your qualifying income. If you want to benefit, of course, from the small business relief, under the small business relief, you will be deemed not to realize any taxable income. So basically, you will not pay any tax. So it doesn't make sense, of course, to accumulate this with the qualifying free zone person status. So what is qualifying income? The qualifying income that is eligible to 0% is constituted by what exactly? So a qualifying income derived by a free zone person from the sources that we will specify in this slide. So basically we'll be eligible to a 0% corporate tax rate if the condition to be a qualifying free zone person are met. First of all, transaction with free zone person, transaction between you as a qualifying free zone person or a free zone person and other free zone person, if those free zone person are the beneficial recipient of that transaction. And of course, subject to the condition that those transactions are not excluded activities, and we will talk at a later stage about what are the excluded activities. So basically, any transaction, and here in that case, the condition, the requirement is that you transact with another free zone person that is the beneficial recipient of that transaction. The only requirement is that the transaction should not be an excluded activity. But in terms of, besides the, the condition that it should not be an excluded activity, there is no restriction on the activity subject to the requirement that you transact with another free zone person. For other transaction, if you don't conduct the transaction with a free zone person, then the transaction will trigger qualifying income only with respect to specific qualifying activities. And of course, those qualifying activities also, they should not cover excluded activities. So if you transact with a free zone person, it's a qualifying income subject to two requirements: that the recipient is the beneficial recipient of the transaction, and that also that transaction is not a qualifying, is not an excluded activity. The second situation is when you transact with any other person outside the free zone, whether in mainland or outside the UAE. In that case, this transaction will trigger a qualifying income eligible for the 0% only if it is related to a specific list of activities that are provided by Ministerial Decision 265 on qualifying activities and excluded activities. And of course, you have always the requirement that those activities, they should not cover excluded activities. The third element in the definition of, or what could be a qualifying income, is income from ownership or exploitation of qualifying intellectual property, and there is a clear definition of what is qualifying intellectual property that we will explain at a later stage today. And then any other income also that is not in these three first category, it could be also considered as qualifying income subject to meeting the de minimis requirement. And the de minimis requirement is 5% or 5 million, whichever is lower. And of course, this de minimis, it was meant to preserve the regime if you have some incidental transaction. If you don't exceed a certain threshold, you still benefit from the qualifying free zone person status, so that you are not penalized by conducting non-qualifying activities or activities that are excluded. And then if you don't exceed this threshold, as I mentioned, 5% of your total activities, or 5 million, whichever is lower, you will still be considered as realizing qualifying income. Now, we talked about what is qualifying income. Now, the second part, what is a taxable income that is not a qualifying income? And these, of course, will be subject to a 9% corporate tax rate. So the income that is attributable to a domestic permanent establishment, income attributable to a foreign permanent establishment, also income from immovable property other than commercial property in a free zone when the transaction is done with a free zone person that is a beneficial recipient, and income from intellectual property other than qualifying intellectual property. And for the sake of the two first parts of what could constitute a taxable income that is not a qualifying income, of course, we need to look at what is a permanent establishment, and in that respect, we should apply the definition that is provided in Article 14 of the Corporate Tax Law. which provides for the definition of permanent establishment. And of course, the domestic permanent establishment or the foreign permanent establishment, we should not forget that we are in the context of the free zone corporate tax regime. So the domestic permanent establishment, it could be also a head office that is outside the free zone. So if we have a head office outside the free zone in mainland and a branch in the free zone, again, I think it's very important to remind this. The head office outside the free zone will be considered or treated as domestic permanent establishment. The branch in the free zone will be treated as the free zone parent, only for the sake of the free zone corporate tax regime. And this has been explained thoroughly in the free zone corporate tax guide. Now, what about the condition to be a qualifying free zone person? So as you can see, the conditions are listed here. And we can summarize these are like 6 conditions. So the first one is to maintain adequate substance in the free zone or in the designated zone with respect to distribution activities. The second one is to derive qualifying income as provided by the Ministerial Decision 265 and also Cabinet Decision 100. The third condition is not to elect to be subject to corporate tax at the rate of 9%, because as a qualifying free zone person, you can elect to be subject to tax, so you can somehow elect to exit the qualifying free zone person status based on Article 19 of the corporate tax law. The fourth condition is to comply with transfer pricing provision and also maintaining the relevant transfer pricing documentation. And fifth condition is to maintain audited financial statement irrespective of the level of the revenue. And condition number 6 is to meet the de minimis requirement. So if you have non-qualifying revenue, this non-qualifying revenue should not exceed 5 million or 5% of total revenue, whichever is lower. This slide is extremely important because it summarizes the key conditions to be considered as a qualifying free zone person. It's also very important to highlight that a free zone person is deemed to be a qualifying free zone person unless it fails to meet one of the conditions to be a qualifying free zone person. So as far as you did not cross the red line and you didn't fail to meet one of the conditions, you are considered to be a qualifying free zone person and you can file your tax return as a qualifying free zone person. So what about maintaining adequate substance? So substance, basically, it needs to be maintained in the free zone or designated zone. So when we talk about free zone, we are also talking systematically about designated zone, but only for the relevant activity, which is the distribution activity, and the substance that needs to be maintained throughout the whole financial year. Across the whole financial year, you need to have substance in the free zone. What substance consists of? It consists basically of having adequate assets, full-time employee, and also incur and spend a certain amount of operating expenditure in the free zone or designated zone. And basically, this needs to justify that you are conducting core income generating activities in the free zone or designated zone. And this is what is referred to as CIGA, core income generating activities. What are the core income generating activities? Basically, they consist of the essential and value-adding activities performed to generate the revenue, of course, including the qualifying income. And of course, the CIGA, depending on the activity of the qualifying free zone person, the CIGA might change. Manufacturing is completely different from the, holding activities, from wealth management, from distribution activities. The core income generating activities are different from one activity to the other. And this needs to be considered on a case-by-case basis. The qualifying free zone person, it must also ensure that it has a certain number of qualified full-time employees that have the qualified experience in order to conduct the core income generating activities. So as we said, the CIGA depends on the nature of activity. Sometimes, basically, it is quite reasonable to have one employee who is performing multiple activities. Sometimes this could not be justified. Based on the activity, you need to have separate employees, different employees. Also, what would be considered is the magnitude of the business, is the size of the business and the activities conducted by the business that is operating in the free zone. And in general, separate substance requirement is required per core income generating activities. And if you look at the free zone guide, we provided extensive details on what are the core income generating activities and what would be an example of substance that is considered as reasonable in that context. Now, of course, the free zone corporate tax regimes provides for the possibility to outsource your core income generating activities. So a qualifying free zone person may outsource his core income generating activities to other person located in a free zone or designated zone. Of course, always when we talk about designated zone is always for distribution activities. And if you outsource as a qualifying free zone person, if you outsource core income generating activity to another person, that activity will be considered as if it is performed in the free zone by the free zone person. But of course, the outsourcing should be to person located in free zone or designated zone for corporate tax purposes, with respect only to distribution activities. The condition to benefit from this possibility is that as a free zone person, if you outsource to another person in another free zone for corporate tax, you need to have an adequate supervision on the activities that are outsourced. And basically, adequate supervision, it means that you have a discretion to assess the outcome, to adjust the outcome, to determine what should be the quality that is delivered by the person to whom you outsource the activity. And this should be documented also based on contractual arrangement, but it should be also followed by the actual conduct of the party. So we need to see in practice that you have adequate supervision on the outsourced activities, if you decide to outsource some of these activities. The outsourcing is also possible for research and development activity with respect to qualifying intellectual property. So the outsourcing is possible for, in general, for, first of all, for the core income generating activity for all qualifying free zone person, subject to meeting these requirements. So the person to whom you outsource should be in a free zone or designated zone, and also you should have adequate supervision. Also, the outsourcing is possible specifically for R&D, research and development activities, which are specifically related to the development of qualifying intellectual property. And in that case, the CIGA, or the core income generated activity, may be outsourced to any person in the UAE, not necessarily in a free zone, or a non-related party outside the UAE. If you want to outsource outside the UAE, that is possible, but you can do it only to a non-related party. And of course, the same requirement is available in respect of the outsourcing of activities in order to consider them as qualifying activity, which is the adequate supervision. And the adequate supervision should be supported by contractual arrangement in terms of assessing the outcome, determining whether the outcome of the outsourced activity is up to the standard required, considering whether those whether deliverables are fulfilling your quality standards, what your clients need from you, etc. And this should be followed basically in terms of the actual conduct of the parties. So you need to document this, and you need to prove that you are conducting this on the field. Let's take an example, basically, on the substance in a designated zone. And again, when we talk about designated zone, we are talking always in the context of the qualifying free zone person about distribution activity. So PLLC is a free zone person in a designated zone. It is a distributor that performs its core income generated activity in the designated zone. PLLC has 500 employees, of which 20 work in the designated zone, performing the core and central operation, whereas 480 employees perform delivery activity outside the designated zone. In that context, also the activity of the 480 employees, outside of the free zone, they contribute to the income of the PLLC. This will not be considered as a CIGA in case they involve only routine activities, and basically, this will not be considered as core income generating activities. The 20 employees working in the designated zone may be sufficient to perform the CIGA activity. So basically, it is not a question only of numbers when you assess the CIGA. You need to determine to which extent this employee is contributing to the added value of the business. What is the level of added value in terms of the contribution of that specific employee who is considered for the sake of assessing whether core income generated activity is happening within the free zone or not. And basically, the 20 employees, as I said, working in the designated zone, they may be considered as sufficient to perform the core income generated activity and meet the substance requirement. And of course, as we said, CIGA needs to be determined on a case-by-case basis and take into consideration all the facts and circumstances. So the type of activities, the contribution of the employees to the core added value, the nature of the business with whom you are dealing. You deal with local clients, foreign clients. All these needs to be considered in order to determine whether you are meeting the core income generated activities in the free zone or not. So, but two key elements: the CIGA, it needs to be met throughout the whole financial year. And also, you need to have the core income generated activities within the free zone or designated zone for corporate tax purposes. So this needs to happen within the free zone or designated zone. Another example on the distribution activity, so we have A LLC, which is a free zone person. A LLC has a warehouse in a designated zone. And it uses this warehouse for storage and distribution purposes. A LLC, it has a registered office and employees in a free zone that is not a designated zone for corporate tax purposes, and it performs CIGA from that free zone office. So again, A LLC is a free zone person. It has only a warehouse in a designated zone, and it has an office in another free zone that is not a designated zone, and the CIGA are performed from that free zone, from that office that is based in a free zone, which is not a designated zone for corporate tax purposes. Again, we said that core income generating activity must be conducted in the designated zone with respect to distribution activities. And based on that, A LLC does not perform CIGA in designated zone, and in that case, it would not be considered to meet the requirement to have adequate substance in the designated zone, even though it has a presence in a designated zone, but the presence is just in the form of a warehouse, and the employees who are conducting the CIGA, they are not based in the designated zone in that warehouse, they are based in another office which is not in the designated zone for distribution purposes. Another example on core income generating activities outside the free zone. So DLLC is a free zone person. It provides regulated fund management services. DLLC is a wholly owned subsidiary of SLLC, which is based in a foreign jurisdiction. The key and strategic decision in relation to the investment or withdrawal of investment, disinvestment are taken by the investment committee of SLLC, who is based in a foreign country. So basically in DLLC, there is no discretion on the activities that are conducted there. Most of it is taken by some board members that are based in a foreign jurisdiction. So basically here, DLLC will be considered to merely execute the investment decisions that are made by a foreign company in a foreign country without any discretion, without any independent evaluation. So basically, because of the fact that all key decision makers are located outside the free zone, in that case in a foreign jurisdiction, DLLC will not be considered to undertake core income generating activities in the free zone for corporate tax purposes. And then DLLC will not be considered to meet the substance requirement, and therefore it will not be considered as a qualifying free zone person. Now, the second requirement, or the second condition, in order to be considered as a qualifying free zone person is to derive qualifying income. So basically, a qualifying income derived by qualifying free zone person, as we said, it will be eligible to the 0% corporate tax rate. And as we said, the qualifying income is consisting of different elements. First of all, transaction with another free zone person, which is not related to an excluded activity, and the requirement in that case is that the other free zone person is the beneficial recipient of that transaction. Qualifying intellectual property also, so income from qualifying intellectual property will be considered as a qualifying income that is eligible for the 0% corporate tax rate. And this consists mainly in income from the ownership or exploitation of qualifying intellectual property as defined by the corporate tax legislation. Transaction in relation to immovable property with another free zone person that is the beneficial recipient of that income also will trigger qualifying income that is eligible for a 0% corporate tax rate. We have also transaction with non-free zone person, and in that case, it should be in relation only to qualifying activities that are not excluded activities. And qualifying activities, it's a list that is provided by Ministerial Decision 265, and we will dive into these activities in the presentation at a later stage in each specific qualifying activity and also excluded activities. And then, of course, any other income, and any other income basically could be considered as a qualifying income subject to meeting the de minimis requirement. So any other income that is a non-qualifying income, if it does not exceed the threshold that we referred to, the lower of 5% of 5 million, 5% of total revenue or 5 million, it still will be considered as a qualifying income that is eligible to 0%. So let's take an example on a specific situation that is related to startup businesses. So we have a free zone person that basically does not earn any qualifying income in a tax period because this free zone person started its activity during that period. So basically, it did not get any revenue, and basically it is incurring only expenses as it is expected to happen for any business that is starting. In that case, as provided under the free zone corporate tax guide, the free zone person will not be disqualified from being a qualifying free zone person, provided that it does not derive any non-qualifying revenue, and also that it complies with all the conditions to be a qualifying free zone person. So the mere fact that you don't generate or you don't realize qualifying income does not exclude you from being a qualifying free zone person. If we look at the example, and of course, let me say that this has been considered just, of course, in coordination with MOFs, has been provided, of course, in the free zone guide in order to make sure that businesses, they benefit from the regime, and of course to provide for sufficient flexibility to benefit from the regime and to consider also the business requirement, the business operation. So if we look at the example, SLLC here is a free zone person, is incorporated in January 2024, and the activity is a manufacturing activity, which is a qualifying activity. So SLLC here is manufacturing, environment-friendly products. As I said, it's a qualifying activity. It has the Gregorian calendar year as a tax period. And throughout 2024 and 2025, SLLC is, of course, in the preparatory phase. It is hiring employees, it is purchasing equipment, working on some R&D to design products, etc., and didn't realize any single dirham of revenues. In that case, basically, as I said, merely because SLLC did not earn qualifying revenue during 2024 and 2025, it will not be disqualified from the qualifying free zone person status. And SLLC can retain its qualifying free zone person status for 2024 and 2025 tax period. And basically, in this case, SLLC can file a tax return or corporate tax return for 2024 and 2025 as a qualifying free zone person. Of course, however, since it does not have any revenue, it will not get the 0% corporate tax rate. But it is very important to preserve the qualifying free zone person status because, as we will see later on, if in one specific period, tax period, one of the conditions of the qualifying free zone person is not met, you will be disqualified for that specific year and also for the 4 following years from the qualifying free zone person status. So it is very important, it's a big advantage to maintain the qualifying free zone person status despite the fact that you did not realize any qualifying revenue. The third condition is not to elect to be subject to corporate tax at the rate of 9%. Of course, this possibility is provided by Article 19 of the Corporate Tax Law. Article 19 allows for the flexibility to, if you are a qualifying free zone person and then you believe that it is better for you to exit the qualifying free zone person status, it allows you to elect to be subject to tax. And then, of course, if you elect to be subject to tax, you will not be considered as a qualifying free zone person for that specific year in respect of which you elected to be subject to tax, and also for the 4 following tax period. So basically, if the election is made, you cease to be a qualifying free zone person from the beginning of that tax period and also the 4 following tax period. You will be treated as a standard, a normal taxable person. And of course, in that case, you can be eligible for the other exemption, other reliefs that are available under the corporate tax law. As I said, the qualifying group relief, business restructuring, transfer of tax losses, etc. The election for to be subject to corporate tax is effective from the commencement of the tax period in which the election is made, or the following tax period, and this is available basically under the Imara tax on your profile, your corporate tax profile. I think it's very important also to specify in relation to the interaction of the free zone regime and the tax group regime that if you are a qualifying free zone person and you decide to make an application to form a tax group as a qualifying free zone person or to join a tax group, so to form a tax group, you submit an application to form a tax group, or to join an application to form a tax group by another person, in that case, you will be deemed to have elected to be subject to corporate tax. Why? Because under the corporate, under tax group regime, under Article 40, Clause 2, one of the conditions to form a tax group is that you are not a qualifying free zone person. And then in that case, if you apply to form a tax group, then in that case, you will be deemed to have elected to be subject to tax. Condition number 4 is to comply with transfer pricing provision and maintain relevant documentation for transfer pricing purposes. Basically, a free zone person must comply with the arm's length principle for transaction with related parties, and of course for arrangement between the free zone parent and the domestic parent establishment and also foreign parent establishment. Basically, profit and losses, they should be aligned with the function performed, asset used, and risk assumed by the free zone person and the domestic PE and the foreign PE. The policy purpose, of course, in that case is that if you are benefiting from 0% tax rate on qualifying income and you have transaction with related parties or intra-company transactions, so within the same company with the domestic PE or the foreign PE, because of your 0% on qualifying income, you should not manipulate your taxable base in order to reduce the taxable base of related parties or other parts of the companies of the free zone person in the sense of a domestic PE or a foreign PE. So this is why one of the requirements is to comply with arm's length principle with transfer pricing documentation. So basically, a free zone person must maintain documentation to demonstrate that it meant the arm's length, a requirement for the transaction with related parties. And of course, it includes preparation of TP documentation in the sense of master file, local file, disclosure form for the a free zone person. And of course, the transfer pricing documentation must be met at the level of the entirety of the person. As we said, the free zone person, when we assess the condition, we assess them at the level of the entirety of the person. We don't look only at the free zone parent or the presence in the free zone. It's just one person. But for the sake of, applying the 0% on qualifying income and 9% on non-qualifying income, we came with this concept of free zone parent and domestic PE and foreign PE only for the sake of the free zone regime. But at the time of filing the tax return, you file the tax return as a single person. And this is basically to answer the question, if you are a free zone company, you have a branch in mainland, as I said, your presence in the free zone, the head office in that case will be considered as a free zone parent. Your branch in mainland will be considered as a domestic parent establishment, but you file one single corporate tax return. You are not filing two returns because it's the same juridical person. It's the same legal person. Okay? And of course, the transfer pricing idea, and requirement and the arm's length principle is basically meant to make sure that your, profits, the profits that are allocated to you, they should be aligned and proportionate or commensurate with the added value that is created by the free zone parent or the domestic parent establishment in case you are in that particular scenario. And of course, if you conduct the transaction with other related parties, other entities, so basically it should be aligned with the added value that is provided by the taxable person in that case, which is a qualifying free zone person. The condition number 5 is to maintain audited financial statement, and basically this should apply to any qualifying free zone person, irrespective of the level of the revenue of the qualifying free zone person. So free zone person must maintain audited financial statement. Why? Irrespective of the level of the revenue or amount of revenue that it earns, because for other taxable person, you need to provide audited financial statement only if you exceed a certain level of revenue, which is 50 million in terms of total revenues. If you are a free zone person, you want to benefit from the 0% corporate tax rate on qualifying income as a qualifying free zone person, you need to provide audited financial statement even if your total revenue is below 50 million dirham. And of course, this is for corporate tax purposes. If you need to provide audited financial statement to a regulatory authority due to other obligation, this is not covered here. We are talking here about the corporate tax obligation that are meant to be met in order to meet the requirement for a qualifying free zone person. Okay? Again, it's extremely important to specify the audited financial statement. They need to be provided for the entirety of the person. So if I go back to the scenario that I mentioned, you are a free zone person, a free zone company incorporated in a free zone, you have a branch in mainland, you need to provide audited financial statement for the entirety of the company, not only for the free zone head office or the free zone parent as we referred to earlier. So you need to provide audit financial statement for the entirety of the company, not only for the presence in the free zone or designated zone for corporate tax purposes. The condition number 6 is to meet the de minimis requirement, and the de minimis requirement is met if a free zone person non-qualifying revenue does not exceed the lower of 5 million of its total revenue or 5% of its total revenue or 5 million. So if you cross one of these thresholds, you will be, the lower of this threshold, you will be considered as not meeting the de minimis requirement. So basically, the total revenue, just to explain this equation, the total revenue is all the revenue derived by a qualifying free zone person in a tax period. The non-qualifying revenue in a tax period is the revenues derived from excluded activities, transaction with a non-free zone person that are not in relation to qualifying activities. So if you conduct activities with non-free zone person and these activities are not listed in the qualifying activities provided by Ministerial Decision 265, I think under Article 2. And also if you conduct transaction with free zone person, but those free zone person are not the beneficial recipient of these transaction. These three types of revenues, they will be considered as non-qualifying revenues, and they should not, the total amount should not exceed 5 million or 5% of the total revenue, whichever is lower. And basically, for the sake of computing the de minimis or checking the de minimis requirement, the following elements, they are not included in the calculation of non-qualifying revenue and total revenue. So basically, the revenue that is attributable to a domestic or foreign permanent establishment, it will not be included because this is subject to 9%. Also, revenue from transaction in relation to immovable property located in a free zone other than commercial property, these elements, they are not included in the equation. Also, revenue from the ownership and exploitation of intellectual property other than revenue from qualifying intellectual property, because also it will be subject, this will be subject to 9% corporate tax rate. So in order to compute or check whether the minimis test is met, you need to use these elements for the sake of assessing whether you cross the de minimis threshold or not. Thank you, and hand over to Juliana to talk to you about qualifying income.
Good morning, everyone. So now I'm going to focus on qualifying income and guide you through the different types of qualifying income we can have within the free zone regime. So first of all, it's important to explain that when we are talking about qualifying income, it's the income that will be subject to 0% corporate tax. And we have different scenarios where free zone persons may benefit from this qualifying income. So the first scenario is quite straightforward. That is when you have transactions with another free zone person, because initially the intention of the free zone regime was to privilege and to allow that transactions within free zone persons were subject to 0%. So provided that they are not excluded activities, these transactions with other free zone persons who are the beneficial recipient of the transaction will always be subject to 0, regardless of the type of activity. Second scenario is when we are talking about a qualifying intellectual property. So when you are deriving income from qualifying intellectual property, this is also subject to 0. Third scenario is where we are having transactions related to immovable property. But here it's important to stress that the focus is on commercial properties with another free zone person that is the beneficial recipient. Fourth scenario is transactions with non-free zone persons. So the free zone regime provides certain flexibility, and for transactions with persons located outside the free zone person, you may still benefit from the 0%, but provided is one of the qualifying activities listed in Ministerial Decision 265. So there is a list of 13 types of qualifying activities, and we'll guide through in more detail with some examples. And final is when we are talking about any other income, provided that the de minimis requirements are met, which is the formula Rita just explained. So there is a percentage, there is a limit that even if you are transacting with other types of income, the regime allows some flexibility that you can still benefit from the regime. So focusing first on the transactions with another free zone person, as I mentioned, here you have more flexibility because you can provide any types of activity as long as it's not in the list of excluded activities, and you have to demonstrate that the free zone person is the final beneficial recipient of the transaction. So here, when we are talking about qualifying income from transactions with another free zone person, that we have this key concept that is, what is a beneficial recipient? So when you are assessing whether the free zone person will be the beneficial recipient, you have to make sure that the free zone person in that transaction has the right to use or to enjoy the goods or services. And also that this free zone person does not have a contractual or legal obligation to supply such goods or services to another person. So you have to make sure that the free zone person is the final beneficiary that they are transacting in order to benefit and to make use of such goods. So to be considered as a free zone person that is the beneficial recipient, the goods or services must be for the use of the free zone parent and not for the domestic or foreign IP of the free zone person. And also it's important to notice that if the recipient is as an agent of the transaction, you have to make sure that the agent is the third part and not the final beneficiary of the transaction. So just to give you an example how we may have a case of a beneficial recipient, a free zone person that is the beneficial recipient, we have the scenario of CLLC, a free zone person that provides legal services, and CLLC was engaged by our LLC to conduct a legal analysis of UAE laws. And in this case, our LLCs wish to have the legal analysis in Mandarin. So the client wants to have the legal analysis in Mandarin. So CLC, they performed the legal analysis, but since they didn't have the expertise, they had to outsource the translation to ZLLC, which is another free zone person. So for ZLLC, the one conducting the translation, CLLC, who contracted Z, is the beneficial recipient of the translation services. So although CLLC provides the translated document to RLLC, which is who initially hired for the legal services, CLLC has the right to use and enjoy the translation services provided by Z. So in this case, as you can see, C does not have a legal or contractual obligation from Z to provide the service, the translation directly to our LLC. So in this case, we don't have to assess what is the position of R, because the contract for the translation services is between Z and C LLC. So in this case, the income received by Z LLC from C LLC will be treated as being derived from a transaction with another free zone person that is the beneficial recipient of the services. So for these purposes, it will be considered as a qualifying income subject to 0% of corporate taxes. Here I have a second scenario, which is slightly different because we have ALC, a free zone person providing catering services to other free zone persons. So most of their customers are other free zone persons. And we have BLC, a free zone person that enters a contract with A for these catering services and makes the payment for such services. But in this case, BLC asks for the catering services to be delivered to its domestic PE, as the services are required to an event outside the free zone. So in this case, even though the contract was established between ALLC and BLC, two free zone persons, in the end, it won't be treated as qualifying income because the final and the beneficial recipient of the services will be located in a domestic permanent establishment. So as you can see, outside of the free zone. So in this case, since the provision of services will be outside of the free zone person, we can no longer consider that the free zone person is the final and beneficial recipient of the transaction, and therefore it cannot be considered as qualifying income. The second type of qualifying income that may be eligible for 0% corporate tax is the income derived from exploitation or ownership of qualifying intellectual property. So what do we mean when we are talking about qualifying intellectual property? We are referring mostly to patents, to copyrighted software, to any right functionally equivalent to a patent that is legally protected. So it's an important concept. We are talking about a legal protection and subject to similar approvals and registrations with the relevant IP body, etc., intellectual property covering those rights. And here it's important to notice that does not include any marketing-related intellectual property assets such as trademarks. So in this case, when we are talking about a free zone person exploiting IP income, they benefit from the 0% city rate, as long as there is a direct connection or nexus between the income derived from the IP property and the qualifying expenditures that the qualifying free zone person had to incur to generate the income. So we need to look for this direct connection, the nexus, to ensure that the free zone person is the one exploiting this intellectual property and derive this qualifying income. And when we are talking about intellectual property for the purpose of the free zone, we have in Article 4 of the Ministerial Decision 265, there is this formula that is how we're gonna reach the qualifying income for the purpose of the free zone regime. So as you can see, you need to sum your qualifying expenditures plus the uplift expenditures divided by the overall expenditures and multiply by the overall income. So again, this formula comes from Article 4 of Ministerial Decision 265. And here I will just give you some explanation on each one of these concepts. So the first one, a qualifying expenditure, we're talking about expenditure incurred to fund the research and development activities directly connected with the qualifying intellectual property. And in this case, R&D must be conducted by the qualifying free zone person or outsourced to any person in the UAE or outside the UAE that is not a related party. The second point in the formula, overall expenditure, here we are talking that the expenditure that is in addition to the qualifying expenditure. So it's your overall expenditure incurred by a related party outside the UAE, as well as the acquisition costs of the qualifying intellectual property. A third concept is the overall income. So when we are talking about overall income, we are talking about royalties or any other income derived from the qualifying intellectual property, as well as the embedded intellectual property income derived from the sale of the products or the use of process directly related to the qualifying intellectual property. And it's important here that you have to make sure that it's determined on an arm's length basis, so in line with the market value. And final concept, uplift expenditure. When we are talking about uplift expenditure, we are talking about qualifying expenditure increased by 30%. So this was set by ministerial decision. The uplift is up to 30% and is applicable only to the extent that the qualifying expenditure didn't reach this 30%, because if it goes beyond 30%, then you don't consider it as uplift expenditure. And about Nexus, as I mentioned, Nexus is the link between the free zone person and this qualifying IP development. So here we are talking about the nexus between qualifying expenditures and income from each qualifying intellectual property asset. And the free zone person, in order to demonstrate that they have the nexus, they should maintain records, books, and documents to prove that they have the ownership or the right to exploit this asset. So here an example on qualifying income and how to calculate the qualifying IP. We have K LLC, a free zone person that has the following income and expenditure in relation to qualifying IP during the tax period. They had 30,000 dirhams of qualifying expenditure, 100,000 dirhams of overall expenditure, and an overall income of 400,000 dirhams. So qualifying income is derived from the ownership of exploitation of qualifying IP, which is in this case is 165,000 dirhams, and it was calculated as following. So we have the qualifying expenditure of 30,000 dirhams plus 9,000, which is the 30% uplift from the 30,000 dirhams, divided by the overall expenditure of 100,000 dirhams, multiplied by the overall income of 4,000 dirhams. So this is the formula we just mentioned that it's included in Ministerial Decision 265. And by applying this formula, we reached that the income in excess of qualifying income is 244,000 dirhams, which is the overall income of 400,000 dirhams minus the amount of the formula, which is the qualifying intellectual property. And this will be subject to a corporate tax at 9%, because this is the income in excess of the qualifying income. The qualifying income would be subject to 0. So you have to differentiate these two amounts. The third category of qualifying income relates to the income derived from immovable property. So here the focus is on immovable property that is used for commercial purposes. So here we are talking about commercial property and transactions with another free zone person that is the beneficial recipient of the transaction. To give you another example, here how to calculate, I'll just turn it here, sorry. So for immovable property, just the key concepts, When we are talking about immovable property, we refer to any area of land over which rights or interests or services can be created. So we can talk about any building, structure, or engineering work attached permanently to the land or to the seabed. And this can be any fixture or equipment which makes a permanent part of the land, or it's permanent attached to a building, to a structure, to an engineering work, or attached to the seabed. So it's a broad concept of a movable property. So it's something that is settled and fixed in space and cannot be moved without deterioration or alteration of its shape. So in a nutshell, this is what we can consider as a movable property for the purpose of the free zone regime. And as I mentioned, to be able to be considered as qualifying income, the immovable property must be used for commercial purposes. So we are talking about an immovable property or part of this property used exclusively for business or business activity. So, for example, restaurants, retail spaces, office spaces, and it cannot be used as a place of residence or accommodation. So, for instance, hotels, they would be considered as an accommodation and not as an immovable property that it has a commercial purpose. So here, just to give you the different scenarios we can have with an immovable property and the commercial property and how it's going to be the CT treatment. So the first scenario, we have a commercial property in the free zone. So in this case, we have income from transactions with a free zone person who is the beneficial recipient. So to remember, they are the final beneficial recipient of the transaction. In this case, is a straightforward case, will be considered as qualifying income subject to zero because the other person is a free zone person that is the beneficial recipient. Second scenario, we have a commercial property in the free zone that is not in the free zone person is not the beneficial recipient. So in this case, they are not meeting the requirement of being the free zone person who is the beneficial recipient. So here, this transaction won't be considered as deriving qualifying income and will be subject to 9% corporate tax rate. A third possible scenario would be other immovable property in the free zone. So if we're talking about other type of immovable property that is not commercial property located in the free zone, again, we don't have qualifying income and it would be subject to 9% city rate. And a final scenario would be immovable property located outside the free zone, including commercial property. So here, in order to be considered a qualifying income, it's not possible because it would be treated as income from excluded activity, which is non-qualifying revenue and cannot benefit from the 0% CT rate. The only possibility here is that if this income would be meeting the minimis requirements, so in this case, they could benefit from the 0% CT rate. Mixed-use property. So here we have some rules from the free zone regime on how to treat mixed-use properties. So if you have a mixed-use property, meaning you could have a building and some floors would be dedicated to commercial activities and other floors to residential purposes, in this case, the income will be subject to 0 or to 9% CT based on the use of that area of the mixed-use property. So for the space dedicated to retail, to commercial activities would be still subject to 0, but the non-commercial portion, so for instance, the floors dedicated to hotels or to accommodations or to a residential area would be subject to 9%. So how we would do the allocation in these cases? We could have a direct allocation, ideally. So let's say if you have 8 floors dedicated to residence and 2 floors of the building dedicated to commercial activities, you would do the direct allocation, 80 and 20%. But if it's not possible, we would use an indirect allocation method based on specific market conditions and the property characteristics of the building. And we could make use, when you are doing your own assessment, and FTA would use and consider records of the relevant land register department or rent and property value in a certain area, use of published indexes, and this would have to result in an arm's length allocation. So it would have to be a reasonable allocation following the market practice. So here, just to guide you through this example of mixed-use property located in a free zone, we have our LLC, a free zone person that has a 10-story building located in a free zone. And in this building that they have 8 floors, which are dedicated for residential units, and 2 floors used for retail spaces occupied by other free zone persons. And our LLC receives an annual rental income of 10,000 million dirhams in respect for the building overall, from the free zone persons that are the beneficial recipient. So in this case, in order to allocate what is going to be considered qualifying income and what won't be considered, we should use the direct allocation method. So in this case, the income derived from residential apartments would be 8 million dirhams, which is 80% of the use. And this income will be subject to CT at 9%, the standard corporate tax rate. And the income derived from retail spaces for commercial use would be 2 million dirhams, which is 20% of the total annual revenue. And this income will be considered as qualifying income subject to CT at 0%. A fourth scenario of qualifying income, we have transactions with non-free zone persons. So as I mentioned, in order to preserve the free zone regime and to give some flexibility to the free zone persons, the regime allows that you can still benefit from the 0% corporate taxes when transacting with non-free zone persons, provided that you meet one of the qualifying activities that are listed in Ministerial Decision 265, and provided that it's not a directly excluded activity. So here, I'm sure you've seen this list was included in Ministerial Decision 265 and provides these 13 categories of activities that are considered as qualifying activities, and they can allow you to benefit from the 0% corporate taxes even when transacting with non-free zone persons. So these are manufacture and processing of goods and materials, trading of qualifying commodities in raw form, holding of shares and other securities for investment purposes, ownership, management, and operation of ships, reinsurance, fund management, wealth and investment management services that are subject to regulatory oversight, headquarters, treasury and financial services to related parties, financing and leasing of aircrafts, and distribution of goods or materials from a designated zone, and logistical services. So as you can see, is a prescriptive list. You need to provide one of these qualifying activities to still benefit from 0 when you are transacting with non-free zone persons. And also you can be performing ancillary activities that are closely related to these types of qualifying activities. And we're going to cover after the break in more detail each one of the qualifying activities and provide you some examples. And finally, when you have any other income, you can still benefit from the 0% corporate tax by meeting the de minimis requirements. And now I'll pass the word to Ruda. Thank you very much.
Thank you so much to our expert for the valuable information. And before inviting you all to take a short break, we would like to clarify that the authority has allocated an information desk in the main hall on your left side. You may ask questions and contact them if you have any inquiries, and they will be more than happy to assist you on any issues related to corporate tax. We will see you back at 12 sharp. Have a great break. Thank you. ما في. It's not there. Okay.